Good morning. Hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, morning.
How's the weekend?
Too short.
It felt like I just saw you guys like a couple of hours ago. Yeah, you need to disappear for longer on the weekend.
Nigel, that is a serious suggestion. Huh? I mean, for us.
After Friday comes Monday, guys. I don't know where that weekend disappears.
I don't know who you want to hang out with, Sonia, but we are happy hanging out with you.
Yeah, we'll hit lower circuit. Otherwise, I mean, the entire market saying you want to be in touch with Surya Shiroy and Surya Singh. All right, let's
the
get...
weekend needs to get a bit longer.
Yeah, and you must have been enjoying your weekend, and out of nowhere, this Motherson Sumi news came as well. So big acquisition, so
by
busy.
The way, on the point of we need longer weekends, Sonia, we're talking about there's a lot of buzz. I don't know if you've read these tweets saying NSE is going to extend the time to 5 p.m.
I read that. Right. I ignored it.
It's going in the opposite direction. But we'll see, right? Fingers crossed. All right, let's get this ball rolling and tell you how things are set up this morning. I mean, we actually are picking up exactly from where we left off on Friday. There isn't very much which has happened over the weekend which should change the outlook one way or the other. So we are starting a new week with absolutely mixed kind of cues. And I'll tell you why. Number one is basically what we emphasized on Friday as well, which is the fact that the very strong US economic data, which we've got starting from the jobs number 2 weeks ago, then the consumer price inflation number, then the producer price inflation number, the services data, it undermines the Goldilocks narrative. What is the Goldilocks narrative? It is simply a point of view which markets had made themselves believe that maybe data will not be too hot, too strong. It won't be weak, but it won't be too strong. It'll be just right, which will allow the Fed to back off. But the data is coming in very, very strong. And that's why I'm saying it undermines the Goldilocks narrative. And the main fear that markets have is that, all this strong data will require a lot more in terms of Fed action. Actually, James Bullard, he's of course known as a hawk in the FOMC. He, on Thursday, said that maybe we should go back from 25 to going back to doing 50 basis point hikes. Now, that may be one view, but even the fact that people are, and these are voting members, are talking like this, I think, is something which the market is paying attention to. All right. On Friday, in the US, the price action was interesting. Equities bounced off the lows. Yields came off the highs, and the dollar index also slipped a little bit from the highs. So this is constructive price action. I mean, equities were lower, to be sure. Over Thursday, Friday was down for equities in the US, but we pretty much ended at the best levels of the day, at the highs of the day. Same is true for yields, which slipped about 10 basis points from the highs, and you had the dollar index, which also slipped from the highs as well. Could be some position clearing. It's a long weekend, by the way. Monday. Today is a US market holiday. So in that sense, we don't have cues out of the US for later today. But we had a little bit of sort of reprieve from rising yields, rising dollar and falling equities. In any case, let's just come to levels here in India. So on Friday, the Nifty closed exactly around 10-15 points in the vicinity of the 40-day exponential moving average, which stands at 17,951. We left off at 17,944. So we basically closed almost exactly at the 40-day exponential moving average. That kind of becomes the pivot. I mean, you get a big gap up that acts as a support. You get a sell down that acts as a bit of a resistance. A move above the recent high of 18,135 should give some confidence. Let's see if you're able to do that during the course of any attempted recoveries. The Bank Nifty on Friday did far worse as compared to the Nifty. It broke last Monday's low, which is the recent low of 41,158. We left off at the Bank Nifty at 41,131. The next support for the Bank Nifty comes in at 40,699. That is nothing but the 50% retracement of the recent up move. That is from the 30th of January to the 16th of February. This, I mean, if you do a retracement, we are the 50% retracement comes in at 40,670 or so. On the upside, the 20-day sort of for the Bank Nifty comes in at 41,436, and then you've got the recent high, which is at about 41,179. But this morning we are coming into this new session, new week, with as I said, what we left off the market like on Friday, but little else in that sense. So I think we'll have to wait and watch for cues to pick up. Earnings season is behind us. That has not been particularly helpful. So we'll see. Guys, hi.
There's a lot to watch out for this week as well, right? There's F&O expiry, so we're going to look forward to that. Apart from that, as you said, the hawkish Fed speak is something that has put a lid on the market gains, and that's why the Nifty is facing a bit of a hurdle at that 18,000 mark. So that continues to be a resistance for the market on the upside. Now, this morning, the SGX Nifty is suggesting a very quiet start. So it's just about 20-30 points up in the green right now, okay, 32 points higher. But if you looked at the flows on Friday, both foreign and domestic investors sold in the cash market. So FI sold about 620 crores, DI sold about 86 odd crores. And although the Dow ended in the green on Friday, it's been the third straight week of losses now for the Dow. Of course, the Fed's peak has been on the hawkish side, and that has put a lid on the market gains globally as well as for our own markets. So as I said, the Nifty is now facing that resistance at 18,000. On the downside, it's approaching the 20 DMA of 17,855. So these are two levels that I'll keep on my radar, 17,850 to 18,000. That's the kind of a range that I'm looking at. A lot of stocks in focus, so we'll talk about that in greater detail. But there is a semi-annual index review by the FTSE. And in that, there are a couple of stocks, Kotak Mahindra Bank, Patanjali Foods, IDBI Bank, have been added to the all-world index. So I'll just keep those stocks on my radar as well. But all in all, you'd have to say that it's going to be a pretty interesting week because there's of course the F&O expiry. Today the US markets are shut later in the evening, so no cues from there. But largely the market has been really range bound. The F&O positions are also a net on the short side. So there's a little bit of on the back foot for the market. Let's see which way it goes.
Well, that's right, Sonia. It appears we're in a bit of a band. You're the 250 to 300 point band on the downside at 17,850, and on the upside, the recent high that we saw. Reliance, well, that's been a big outperformer actually. Just take a look at the last 5 trading sessions. The stock is up close to around 4% and the Nifty is more or less flattish. So you'll say, hey, we're not breaking down, but we're not breaking down because one big component of the index, it seems to be finding its rhythm. So, Reliance Industries will be crucial, but it will need the Nifty Bank to support because that's been doing a relative underperformance over the last few sessions. So the Nifty Bank will have to come in there, play a bit of a support role to Reliance if we have to break on the upside. The IT index, so that's the Nifty IT index, that could remain a little bit subdued. And I say that because, in fact, the NASDAQ seems to have lost its way a little bit in the near term. And that's because of the rising yields, this Fed talk, which is quite hawkish, that's a little bit worrying. What are the FIs doing in the F&O market? Well, they added close to 10,000 short contracts. They unwound some longs as well. Close to 1,600 long contracts were unwound. That takes the short positioning now to around 77%. They bought close to 1.5 lakh calls as well as puts, so no big direction coming out of there. But what's telling you that at higher levels we're going to see a lot of selling is because they wrote way more calls than puts. More than 2 lakh calls were written, and we're getting to expiry day. What are we working with in terms of the options that were active? 18,000 call, 17,900 call. Just take a look at that. Between them, they added close to around 1 crore shares. So there is aggressive writing that we're seeing at higher levels out there. And the 18,000 call, by the way, the total open interest is more than 1 crore now. On the Nifty Bank as well, the 41,500 call, well, that was fairly active. It added more than 30 lakh shares. So there was some writing that we've seen out there, pocketing a premium of close to around 200 rupees, which brings us straight to the levels. Supported around 17,850. That's because, in fact, we have the 20 DMA in that vicinity. Resistance 18,080, and I say that because the 18,000 call was getting written. And on the Nifty Bank, you're facing resistance at around the 100 DMA. That comes in at around 41,700. While on the downside, we bounced off 40,850. So that's why I'm watching that as a crucial support zone. SGX, if we're suggesting a gap up, I think that gets sold into some point of time. We're in a bit of a range. The crucial part will be, can we break out of the range and the levels that we put up for you, on the screen.
Absolutely. And I think there is this overarching fear that the rate hikes would impact demand, right? Yeah. You're seeing it with Brent as well. Brent has fallen to, I think, $83 a barrel because that's the fear that, the inflation fight is not over just yet. The US Fed's targeted inflation rate of 2% may not be met anytime soon. At least that's the view coming in. So you've seen a fall in Brent on the back of concerns that higher rates would perhaps impact demand. But lots to talk about, so let's get the views going in straight up. First up on the equities front, you have Chetan Seth of Nomura, who says that peak rate expectations have risen significantly since strong US non-farm payroll data, which has also led to renewed dollar strength and higher US bond yields, both of which are not good for Asian stocks in general. There's now significant uncertainty on the near-term US data, given recent data surprises, which has caused an uncertainty around inflation with the outlook and thus the Fed policy outlook. In the near term, Asian stocks will not like this uncertainty, and thus Nomura expects some volatility until a trend in the data is formed again.
Okay, let's get you some money market views as well. This is B. Prasanna who weighs in on the rupee. He says that globally, broad-based dollar strength continues to deter stronger than expected economic data and hawkish commentary by Fed members. Back home, improved current account deficit and balance of payment outlook along with a favorable seasonality will support rupee in the near term. Prasanna expects the rupee to trade in the range of between 82 to 83 to a dollar range with an appreciation bias.
Okay, and on the bonds, V. Prasanna says that bond yields continue to remain under pressure as higher inflation prints and stronger set of growth data resulted in expectations of higher terminal rate, both globally and locally. He adds that a favorable bond demand supply outlook for the remaining part of the fiscal is expected to keep Indian bond yields range bound with the benchmark 10-year trading between 7.25 to 7.45%.
All right, well, we have a lot of stock-specific action for you, and we'll get to that in just a bit in our special Top 10 segment. We are looking at Samvardhana Motherson, Precall, CRISIL, KEC, Power Grid, Supreme Industries, Benar Industries, and RITES. Their stocks on the back of positive news flow, while we have Cipla and United Breweries that could react to the negative news flow of the weekend.
All right, those are stocks with news and results, etc.